Alright, family. Welcome to another edition of Maryland Economic News, Alright, family. Today is Sunday, July 12th, 2020. Alright, family, we're going to go ahead and get it started, alright? This is a pre-market look at what's going to happen tomorrow here in the U.S. and also what is happening overseas as we speak, family. Because some of these markets are trading right now overseas because remember, the overseas is hours ahead of us and they're probably getting ready to wake up, or they have their pre-market trading going on right now. The futures market is kicked in and they're about to open up their stock markets. Alright, family, so we're going to start off with the U.S. This is coming from CNN Business pre-market trading. We're looking at the Dow, NASDAQ, and S&P 500. They're all set to open tomorrow in the plus. We're looking at the Dow at about 1.44% higher. You have the NASDAQ, which is about plus 60.66% up. And the S&P 500 is just up over a point at 1.05%. Alright, open up. Alright, so we look down at here at some of the world markets. Okay, the Nikkei 225 Japan is down at about negative 1.6006%. The Hang Seng, the Hong Kong, is down about 1.84%. The S&P, the FTSE 100, that's England, she is up about 0.76%. The DAX, which is German, is up about 1.15%. Alright, family. Alright, we switch over to some currencies, how the currencies are doing. The Canadian dollar is up at about just a little bit over 5 cents at about plus 0.0552%. Alright, family. The United Kingdom pound. The United Kingdom, as we stated earlier, that's Britain and all the other United Kingdoms around Britain. Alright, they've united to form one power. Alright, she is down about 0.1324%. Alright, family, and the euro is down at about negative 0.1354%. Alright, family, and the Japanese yen is down about 0.2798%. Alright, family. Alright, we're going to switch over to Yahoo Finance. We can look at some of the other stuff that is going on. Alright, we look at Bitcoin. We look at some of the cryptos. The Bitcoin is down about negative 5.04, just down about 0.05%. Alright, family. Alright, we'll take a look at the 10-year bond here in the U.S. 10-year bond is up at about 4.63%. Alright, family. Okay. Alright, we'll take a look at the crude oil. Crude oil that is about a full 1 point to about plus 2.25% at about $40.62 a barrel. Gold is up. Gold is actually down about 2 points, about $2, which brings it down to $1,801.80 an ounce. Alright, silver is up to about $19.08 an ounce, and the euro to the US dollar, another currency, is up about 0.16%. Alright. Alright, family. Now we're going to go ahead and get started with what's going on in the US right now, family. I will post some links about this, some articles, and I hope I get some pictures up that to signify what's going on where I'm at right now. Alright, this is courtesy of the New York Post. Yeah, the New York Post is putting something up, family. Alright, national corn shortage has retailers pleading for exact change. Now, I've seen this over the past couple of days over where I'm at. Some of the grocery stores I went to, local gas stations, they're all putting up signs basically saying exact change only due to national corn shortage. Alright. National corn shortage has retailers pleading for exact change. They blame the coronavirus again, family. Alright. The coronavirus crisis has sparked a nationwide corn shortage as reportedly has retailers pleading with customers for exact change. The Federal Reserve revealed last month that the pandemic has significantly disrupted the supply chain and circulation pattern for America's metal money. The U.S. Mint has slowed production of coins because of measures meant to protect workers amid the crisis. While coin deposits from banks have also fallen in the past few months, the central bank said. With demand for coin rising as states began to reopen, the Fed on July 15th started limiting how many pennies, nickels, dimes, and quarters it distributed to banks as part of its effort to mitigate the effect of low coin inventories. Alright, fam, we're going to read that one again. And you got to read these stories and read into them, okay? Some of them don't make sense of what they're saying. While demand for coins rising as states began to reopen, the Federal Reserve on June 15th started limiting how many pennies, nickels, dimes, and quarters it distributed to banks as part of its effort to mitigate the effects of low coin inventory. Alright, so we got a coin shortage here in the U.S., family. Alright, and with the banks, with the places starting to reopen and people starting to spend money, changes, the currencies are changing flow of hands, the Federal Reserve is limiting the amount of hard currency. That means stuff with physical value, not paper, that you can hold and that banks are allowed to give out, family. They're limiting pennies, nickels, dimes, and quarters. In a coin shortage, they're exacerbating the issue by limiting the amount of pennies, nickels, quarters, and dimes you can have. Does that make any sense, family? Alright? We're already short and they're making it even shorter. Alright? Retailers have since started advising customers that coins are in short supply. Some Lowe's hardware stores have posted signs urging shoppers to pay with exact change or use other forms of payment. Some convenience stores such as 7-Eleven, Pilot, and Circle K, according to the news reports and social media posts. Alright, we're going to switch down. At this point, we are having a call daily to get coin. Karen Gordon, a 7-Eleven franchisee in Elmira Heights, New York, told local NBC affiliate WETM, the most we've been able to get is $122. Alright. Then it goes down to say one of the shortages one of the supermarket chains is Mayor. She's not the only one. Food Line has also said it. Alright, family. So we having a nationwide coin shortage, family. So if you see any pennies, nickels, dimes, or quarters, please keep them, family. That's money for you. That's actually kind of a hard currency. It's not paper. It's actually backed by some type of metal. All right, metal, copper, silver, nickel. Yeah, family, you get it, family. All right, not actual nickel, but there's a term for the actual metal called nickel. All right. Let's get into some of these other articles, family. All right, this is coming. We're gonna start off. This is coming from overseas. All right, family, Israel. Alright, this is courtesy of Yahoo Finance. Alright, the Bank of Israel sees 2020 budget deficit 13% of GDP, backs new aid package. Alright, Reuters. This is released as today, July 12th. The Bank of Israel Governor Amir Yaron on Sunday threw his support behind a second stimulus package to help those hurt by the coronavirus outbreak, despite the extra spending that is expected to boost budget deficits in the next 2 years. So they're gonna incur more of a budget deficit, family. Alright, you can't spend your way out of deficits. Alright. Israel government already approved aid of 100 billion shekels, or 1.29 billion US dollars, but only half about it has been allocated. Prompting a protest by thousands on Saturday night in Tel Aviv. Tel Aviv is the capital of Israel. Alright, family. Alright. Against what they say has been an inept government response to the economic crisis. Unemployment soared to 27% after the country's partial lockdown in March, but is now running at 21% as people come back from furlough. Prime Minister Benjamin Netanyahu last week announced a new package for Israel, who have lost livelihoods due to the coronavirus crisis. Alright, saying that the measures would provide an economic safety net for the coming year. Yaron said the fiscal cost would be 15 billion shekels in 2020 and 27 billion in 2021. That, he said, would bring together a budget deficit of about 13% of gross domestic product. If you hear somebody talking about GDP, that's just gross domestic product. That's the overall total budget. All right. Product this year and 7% next year. Before the second stimulus package, the budget deficit was estimated 11% of GDP, up from 3.7% in 2019. Alright. The debt to GDP ratio would rise to 76% in 2020 and 78% in 2021, from about 60% last year. All right, family, that's a big deal. The debt to GDP ratio. So they're looking at a 76% increase in the debt to GDP ratio this year, 2020, and a 78% rise in debt to GDP in about 2021. Family, that is unsustainable. Governments can do that. You go to a bank and say you want to increase your deficit. You want to increase your deficit, and they'll try to apply for a loan. You have that much debt on your record. They won't even look at you. They'll laugh you. Or probably call the men in white suits to come get you. All right, family. All right. The next article comes from ZeroHedge.com. J.P. Morgan. Do research on J.P. Morgan, family. There's some stuff you need to read about that one. J.P. Morgan is now bearish, bullish, and neutral on stocks all at the same time. Oh, and buy gold. That's the news article. All right, family. All right. At the same time, markets have never been more broken, disconnected from reality. As Bank of America showed earlier, it is hardly a surprise. Let me go back, family. If you see the sign BO, capital B, small o, lowercase f, and capital A, family, that's Bank of America. All right. Showed earlier, it is hardly a surprise that the largest U.S. commercial bank, which is appropriately enough, that was just surpassed in market cap by Tesla, which has never turned a true GAAP profit in its history, has two dramatically opposed views in the market. On one hand, bullish, and the other hand, bearish. Instead of delving the logic behind each analysis, since it is meaningless to analyze anything in this broken market, where the only thing that matters is that the Fed is going to do or will do next. We will content ourselves on with merely laying out the various components of this theater of the absurd. All right. Basically went in how Bank of America and J.P. Morgan will basically they'll do what the Fed tells them to do. All right, family, that's it. All right. All right. First, as the first profile share here earlier this week, here is an expert from the report written by J.P. Morgan, head of equity strategy. I can't say it in MISLVA. LAV. And last name is Matejka. Alright, family. Published just 4 days ago on July 6, 2020. Here is the hardline punch. We had a positive equity view through 2019, but we believe this risk reward is unattractive for equities in the second half of 2020. Alright, stocks are likely to lag behind and cash again. Alright, stocks are likely to lag bonds and cash again, as they did in the first half of 2020, to justify his bearish slant. Her last name again gives the following three main concerns for the second half of 2020. First, we will template of SARS in 2003 fully repeat, where after May of 3 there were no further negative impacts on activity from the virus. Most economic projections consumer behavior is likely normalized in second half of 2020. If you heard in Novarco what it's talking about TH, that's the second half of the year. 1H, that's the first half of the year. Alright, but that might not work if the COVID-19 lingers. Alright, so they're thinking about the COVID-19 is going to linger. People are starting to come out in certain states of backing down, saying we got a resurgent rise, and they're going to come out again. Alright, it goes down here to say the news article. Basically, they basically said the stocks are some of the stocks and bearish and bullish or neutral stocks, and they're warning that okay, they're bearish on stocks, they're bullish on stocks, but throughout all this, family, buy gold. All right, I know not everybody can afford gold, but go ahead and get silver. Silver will be the technological metal, and gold would be the financial instrument. All right, it may seem like silver's way behind gold, but trust me, once gold push through the door to unforeseen heights, like it did, then silver's gonna fly through. All right, gold needs to come through before silver can fly through the gates. All right, and as we can see, family, the gold has broken through another resistance level. The resistance level was set. The new one was set at $1,800 per ounce, and it broke that this past week. And the next resistance level is about they're claiming at $2,000 an ounce. There are people who have been gold bugs for the longest time, long before I even born, was still alive. They say that once gold had the manipulation ceases and it hits about $2,000 an ounce, that floodgates are going to open, family. And pay in mind that Judy Shelton, one of the president's nominees, she's a gold bug. All right, she's one of President Trump's he's trying to get her set into the Federal Reserve Board head, and she's a big gold bug, family. All right, look her up, Judy Shelton. All right. Another story about Zero Hedge. All right, one bank admits markets have never been more broken. So here's what happens next. All right. They're talking about a V-shaped recovery. V-shaped recovery on Wall Street, leading V-shaped recovery on Main Street. Or see the PMI and housing activity. Gasoline deemed good. U.S. mobility signals up sharply to 9 million barrels per day from spring lows, which should see if virus again negatively impacts the economy. Market rationing prices in max liquidity minimum growth backdrops, as they have done for 10 years, of 3,042 stocks in MSCI and ACWI, according to the 2041, greater than 20% below their all-time highs. All right, switch down. While the markets may have been broken, one would expect in a world where central banks have taken over all price discovery, three keys trend to remain and total unchanged 2020 per Bank of America. Central bank liquidity drives asset prices, credit prices drive equities, sellers strike in credit, and tech mirrored by buyers striking value and value bank stocks and banks. All right, cash and gold, the big inflow winners of 2020. All right, some people jumping into cash, some people jumping into gold. All right, I don't trust paper currencies, and if you can't hold it in your hand physically and if it doesn't weigh anything, then don't trust it, family. It has to weigh something while it's in your hand. All right, family. So that's it for today's edition of Melanie Economic News. I will put a link in some of the descriptions about what the Federal Reserve is saying about the corn shortages. It'll be some links you can look at for. All right, family. If you like the intake, go ahead and like, subscribe, comment. Please leave constructive comments, family, how we can make it better. All right, family. Once again, thank you for joining another edition of Melanie Economic News. All right, family. Be safe out there. Take it easy. Let's get it started.